let's go over to the quarter breakdown, right? Let's go over to the quarter breakdown and see what Tesla dropped. Now, this is the Q2 2022 update. Now, this is really truly a great update here. And I really truly like how Tesla is very, very succinct in terms of how they break down what they've got going on. It's very truly easy for us to understand. Now, operating cash flow, less capex, free cash flow of 621 million in Q2. In total, 0.8 billion increase in our cash and cash equivalents in Q2 to $18.3 billion. You see, there's something, people always give Tesla a lot of grief about how it's very expensive from a PE perspective, a price to earnings multiple. People are sleeping on the fact that Tesla has a strong balance sheet, has a very strong balance sheet. That's why I really truly like this company. That's why I say that people need to be finding their interest to get into this company, because it's a strong company, strong balance sheet. The company said that we continue to make significant progress across the business during the second quarter of 2022. Though we face certain challenges, including limited production and shutdowns in Shanghai for the majority of the quarter, which I will say will be temporary, I might add, we achieved an operating margin among the highest of the industry of 14.6%, positive free cash flow of 621 million, and ended the quarter with the highest vehicle production month in our history. All right. Profitability, 2.5 billion GAAP operating income. Very good. 27.9% GAAP automotive gross margin. New gigafactories in Berlin, Brandenburg, and Austin continue to ramp in Q2. Gigafactory Berlin reached an important milestone of 1,000 cars produced in a single week, while achieving positive gross margin during the quarter. Very positive. From our Austin factory, the first vehicles with Tesla made 4680 cells and structural battery packs were delivered to our US customers. Okay, that's a good thing. And they're going to continue to invest in capacity expansion of our factories to maximize production. The energy business. Now, people don't talk a lot about Tesla's energy business because it's very small. The energy business has made up meaningful progress in Q2 as well, achieving higher volumes with stronger unit economics. Okay, that's very, very good. This has resulted in overall record gross profit. Customer interest in our storage products remains strong and well above our production rate. So we talked about the 1,000 vehicles produced in a single week in Gigafactory Berlin, highest solar deployment in over 4 years, with each of the Fremont and Shanghai factories achieving their highest ever production months and new factory growth. We are focused on a record-breaking second half of 2022. Now, this is the financial summary. And this financial summary is going to put everything into perspective on what Tesla has been doing over the last couple of years. Now, in the red, this is the quarter that we're looking at. Our automotive revenues, they were up 14.6 billion. That was up 43% year over year. That's very good. Automotive gross profit, 41%. That's up. Again, that's up 41% year over year, right? Automotive gross margin, 27.9%. That's down 46 basis points. But we understand that they've been dealing with a lot from the COVID lockdowns, inflation, material struggles. All of that is just what's going on with that. So total revenue, 16.9 billion, still up 42% year over year. 4.2 billion in gross profit, up 47% year over year. The total GAAP gross margin, 25%, up 89 basis points year over year. Everything is still up year over year. The company is still operating strong. Operating expenses were 1.7 billion. They were up 13%, but that's really truly about the investment into the factories and also investing into that research and development. You want to pay attention to what companies are investing in from a research development standpoint. Almost 2.5 billion in operating income, very good. You know, operating margin, 14.6 billion, up 358 basis points, very strong. You know, adjusted EBITDA, 3.7 billion, up 52%, right? Earnings before interest, taxes, depreciation, and amortization. Adjusted EBITDA margin, 22.4%, up 159 basis points. So very strong. Net income attributable to common stockholders, GAAP, 2.2 billion, up 98%. EPS attributable to common stockholders, diluted GAAP, up 91%. Net cash, 2.3 billion. Net operating cash flow, up 11%. Okay, y'all are seeing the trend here, up, increasing year over year. And the cash and cash equivalents, 18.3 billion. This company has strong cash and little debt. So they have the ability to invest and execute on what they need to execute on. They need to execute on the full self-driving, which is that autonomous layer that's going to be able to help them grow. They have the cash and they have the financial position to be able to make sure that they invest into that. Okay, like that's just strong. Like if you look at what's going on, total revenue up 42%. Like everything is operating very, very good with this company from a balance sheet perspective. Okay, so let's look at the automotive production. Okay, the automotive production, because Tesla makes 4 vehicles. They make the Model 3, which is a 4-door mid-size sedan. Okay, they manufacture those out of Fremont, California, and Shanghai, China. The Model Y, which is an SUV, they manufacture those out of Fremont and Shanghai. They have the Model S, 4-door full-size sedan. They manufacture that one in Fremont. And the Model X, your mid-size SUV, they manufacturing that one out of Fremont as well. Now, at a total production, you've got 258,000 vehicles. That's up 25% year over year. That's very strong. Your total deliveries, 254,000, up 27% year over year. People will just keep talking to you about like the difference between what they did in Q1 and what they did in Q2. Q1 was a different quarter and they had different challenges than what they had in Q2. They'll tell you that, man, Tesla is down in productions and deliveries sequentially, right? Quarter over quarter. This is what I want you to understand as an investor. Please keep this in mind and understand this as an investor. Seasonality is very important. It's very, very important, excuse me. Understand that companies have certain quarters where they are stronger and certain quarters where they are weaker. For example, right? Let's take a Salesforce, for example, ticker symbol CRM. Their revenue that they have is recurring revenue, and it's largely enterprise revenue, and they have that in terms of contracts. They have that contract revenue, but they receive that revenue in a certain quarter. So yes, certain quarters may be lower, but understand how low is it in relation to where it was last year in that previous quarter. That's how you put things into perspective so you can sift through that noise as an investor. Remember, I always talk to y'all for the Trade for Yourself podcast, where we teach people how to trade and invest in the stock market for yourself. I always say you got to be able to think like an investor. If you don't have the ability to think like an investor, then you won't be successful, right? That's why I say we have to do the research into these companies. If you are not researching into these companies, you should not be investing into singular stocks. You should be investing into ETFs, right? You should be investing in ETFs, which we will talk about those in the future. So we got solar deployed and you got the storage deployed. Now this is their energy, right? So you know Tesla has these solar power walls and they have solar panels that are pretty much on top of your house. Now the solar deployed was 106 megawatts. I believe that's megawatts, 106 megawatts. That's up 25% year over year. The storage deployed megawatt hours, that's 1,133. That's down 11%. Okay, so we understand that. We got some storage service, supercharger locations and whatnot. And so now here we're talking about, we're pretty much looking at the market share. Look at the market share of what Tesla has. We're looking at pretty much the capacity, and we're looking at the pretty much what they produce right now and what they're projected to produce in the future. Look at that Cybertruck in development. Tesla Semi in development. That is going to be a game changer. Okay, a game changer, because a partially autopilot semi truck, that's going to be major in terms of a logistics perspective. Okay, Tesla Roadster, I'm grabbing this one as well. This is another one that I'm going to be getting. Okay, robo taxi and others, autonomous driving. We're talking about possibility and over $2 trillion industry that we can be tapping into in terms of Tesla. I talked on Instagram. I talked about Waymo, right? Google owns Waymo, another autonomous driving company. Understand this, all right? Autopilot and full self-driving. As of the end of Q2 2022, over 100,000 Tesla drivers in North America had access to full self-driving beta, the beta platform. Cumulative miles driven by our customers using city streets, supervised autonomy continue to grow at an unprecedented scale. Fleet data is an important part of improving and expanding the system. We recently relaunched the enhanced autopilot option in North America for customers who are only interested in highway autonomy. Look at this over here on the right. Cumulative miles driven with FSD beta. Very small from October 2020 all the way to September 2021. But once you broke out, this is exponential growth, y'all. We're talking about less than 5 million, we're up to 35 million in terms of cumulative miles driven. Tesla, it knows exactly what they're doing. That's why I said to y'all at the beginning, Tesla is a technology company that just happens to make electric vehicles. That's very, very important for you to understand the value of this company. Vehicles with adaptive suspension in North America can now automatically adjust to a more comfortable ride height before encountering a section of rough road, informed by continuously updated data collected by our fleet. Our latest vehicles now use Tesla Vision to tighten seat belts earlier in a wider array of frontal crashes. So pretty much Elon Musk actually talked about this on the call. And what he was saying was the Tesla vehicles now have the ability to pretty much, like, if a crash is coming on, the car has the ability to anticipate the crash ahead of time. So it tightens that seatbelt in tension so you can be safer as an individual who's driving that vehicle, right? That's very, very important. The architecture of electric vehicles allow us to rethink vehicle design and the manufacturing process, but beyond what was possible in the combustion engine era, right? Now, thanks to large castings and parts consolidation, the robot count in our body shops and new factories dropped by more than 70% per unit of capacity compared to our first iteration of the Model 3 body shop. This is very good. And they are continuing to lower those costs. Our quest for simplification is not over. We will continue to drive simplification further with every new product and every new factory. Now, that is big time. Okay, Tesla understands the technology and they are investing in the research and development of this company. So this is very, very important. So we're talking about energy storage, solar and services. This is another segment of the business that's going to grow later on. You know, right now, this segment of the business is probably less than 2% of the business. But we understand that the way that we consume energy in the United States and also the way that we consume energy globally is going to change a lot. And so solar energy is going to be pretty much instituted into the grid, and we're going to be using solar energy more, right? Because the reliability on certain energy sources in pretty much when you look at climate change and you look at, you know, us pretty much having abnormal weather events more regularly, the current infrastructure in the power grid is not going to be able to withstand all of that. So Tesla is taking the time, they're leading the forefront in terms of renewable energy and using different components. So I would encourage y'all to come back to here and check out what they're doing from a solar perspective, energy perspective. Now, from an outlook perspective, they expect to achieve 50% average annual growth in vehicle deliveries. Okay, so the China lockdowns, you know, right now China is open, but that's not something that we can just rule out for the rest of the year. But I believe if they've been able to navigate it this well this year, I believe they're still going to be able to have a great second half. Like Tesla is primed to have themselves a great second half. All right. And so we look at some photos here, and this is very, very good. You know, I like the technology. I like the factories. I like the strong management. I like what they're doing from a lot of different perspectives. And before we get out of here, right here, we're looking at this faster tension development. This right here doesn't have anything to do with what I'm about to say, but I want you to understand that Tesla said that their main driver is going to be that Tesla robot. That Tesla robot could mean more to the business from a revenue and gross profit standpoint than the cars themselves and full self-driving. So keep that in mind. Understand that. Look at these charts. It's continuing to increase year over year, quarter over quarter is what I like to see. Vehicle deliveries up year over year. Net income up year over year. Operating cash flow up year over year. This is exactly what I like to see in businesses, right? Strong balance sheets, strong standpoint. Now,